Welcome to Get Serious. So today I wanted to share a few tactics, logistical items when dealing with foreign sellers for land or really any um, real estate that has to be transacted within the U.S. So it has to deal with this thing called FIRPTA, F-I-R. So we actually dealt with this much more substantially, fairly frequently earlier on in our land journey, especially when we were doing more in-house closes and having to learn how to deal with the ins and outs of the tax associated and sending in the right forms to the IRS. But basically with FIRPTA is that actually, I'd have to double check, but I believe if the seller of real estate within the U.S. is a foreign national or doesn't have a U.S. citizenship, then they have to pay a tax, or really it has to be a tax on the property that is withheld or paid from buyer proceeds. So long as it's not a primary residence. And generally it's up to 15% of the purchase price. So to break this down further, let me give you an example. Because the IRS doesn't want to have to chase down funds and taxes from folks who aren't U.S. citizens, they basically put the onus on the buyer of the real estate to take care of those taxes and ensure they are paid really at the time of sale. There's a little bit of carryover time, but it's like really quick triggers. I think if you don't get paperwork into the IRS within even a matter of a few weeks, like interest rates just, or there's like 8% plus penalties that happen pretty quickly. So you basically have to treat it as an extra 15% of funds that need to be sent in on top of whatever the purchase price is for the deal. And we're talking like gross purchase price. So, if it was a $10,000 purchase, then an extra $1,500 needs to be sent in to the IRS really at the time of sale. But again, the IRS puts the onus on the buyer to take care of that. So, ultimately, even if the buyer is sending in those funds, it's a tax liability for the seller. So depending on whatever their tax situation is, or maybe they've sold the real estate at a loss or something, like they might be able to recoup some of that money. It's just the IRS requires that 15%, I think sometimes 10%, but generally 15% to be withheld at the time of sale. And then, maybe some can be distributed back as far as a return refund to the foreign national seller later on, depending on their unique tax situation. So I remember when we were dealing with these, again, just doing self closes, like it's a lot more complex without title companies, because again, you have to deal with all these IRS forms and so forth. And so like we used to have within our purchase agreements, hey, if you're a foreign seller, like, by the way, we're going to have to adjust the price of the property to account for FIRPTA. Because like it was going to be more money out of our pocket. It's not like we could necessarily withhold proceeds, or we would have to kind of work with the seller to have them understand the route that we could do this is either, we withhold 15% of your anticipated proceeds compared to what's on the purchase agreement, or we have to proportionally decrease the purchase price on the property so that whatever that 15% is that's needed by FIRPTA only to that original purchase price that we had agreed on. So it's like two ways to arrive at the same outcome ultimately. The IRS still gets paid whatever they're looking for effectively, but it just added in a whole bunch of complexity to dealing with that. And it's hard for sellers to fully understand. They're like, yeah, well, like, why do we have to do this? And it's like, well, it depends on your own tax situation, and you're gonna have to deal with the IRS later on anyway, filing your tax returns. But ultimately, that's kind of the mechanism to keep in mind here. We hadn't dealt with it in quite a long time. I honestly couldn't remember the last time we had dealt with a foreign national seller, but it did come up for this much larger transaction that we were pursuing recently. And I knew this individual was not a U.S. citizen from the start, but I made quicker assumptions that, okay, yeah, title company's involved with it, so like they're just going to deal with this process of handling the FIRPTA forms and withholding taxes from the proceeds that we are submitting. But again, you should always want to be dealing with things faster and just kind of clarifying things, especially with sellers. And, we get a lot of, kind of loose cannon sellers in this industry, for them to understand the implications of FIRPTA and how much, their proceeds may be affected at the time of close, and like their HUD could be significantly less because they're basically paying all of their tax up front compared to whatever tax they might owe on the property when they actually file their returns later on, or to the U.S. government. Maybe they're not even routinely paying to the U.S. government if they don't have other transactions. They're not a citizen of the country. So it's just more of a hit up front to them. So I wish we would have dealt with that earlier on, because and I just made too many assumptions with the title company. I'm like, yeah, they're going to deal with it. But we found out like the day before the close, it's like, hey, you guys need to acknowledge that either you're going to deal with FIRPTA after close, just dealing with it outside of title, or we can prep the docs for you. But again, like the wording is, hey, technically the buyer is responsible for paying this tax. So like it was a very high purchase price deal where the tax was going to be like 50 some odd grand for the property. So like that would have destroyed the deal for us if the seller wasn't on board and they're like, hey, you guys need to cover this because technically it's the onus is on you. And this was like day before the close. We had prepped everything prior to this. But we got the title company on the phone and we're like, okay, we understand, yeah, you guys can handle this and prep the forms for us. Just tell us what we need to do on our end. Yeah, it's just like sign a handful of forms here. They'll take care of this for a fee. No problem compared to having to do this on our own here, just to ensure everything is squared away and solid. And yeah, the standard approach is just reducing the proceeds that the seller receives at the time of sale. But again, need to have them on board with that versus it becoming like a fight at the closing table. So ultimately, we were able to sort that out, and the seller had actually already researched and reviewed FIRPTA, because I guess the title company had brought it up further in the past when he was first exploring paperwork. So that was a good sign. So he was aware, yeah, this is going to be a tax hit that he's going to have to eat. And again, it all depends on the seller's unique tax situation. If they had sold at a loss, like they're going to get some of that money refunded, more than likely, depending on what other income they have within the country or anything. And in this case, yeah, they were going to sell for a profit, so assuredly they were going to owe some type of tax on the deal. Was it going to be the exact amount? That raw 15% that gets withheld off the bat? Maybe not. I think it's probably less than that because the FIRPTA is basically assuming a cost basis of 0 for their tax. So like whatever the property sells for, they're just taking 15% off of that raw asset, not accounting for the cost basis. So like if you were only earning $1 on it, then, you'd only pay 15% of the income that you were making on that particular, or the net income that you were making throughout your time of holding that asset. So again, you just have to account for, hey, you might be eating a larger tax up front, almost assuredly, but more than likely some of that's going to get remitted back. It's just, again, the IRS is trying to be conservative with retaining funds for the purpose of taxes versus having to like go hunt things down from foreign nationals, which is probably crazy hard to police. So like I understand how they set up this mechanism. It prevents further nefarious activity besides, just having to track down. Like I don't know, maybe you could create some sophisticated money laundering situations by working with foreign nationals sell U.S. real estate. Can't quite work that out in my mind, but I'm sure there are scenarios like that they're trying to prevent. So just wanted to mention that there as far as understanding like some of these implications, because like fortunately we had dealt with FIRPTA in the past, just had been a while, but like the land investor partner with us, like, hey, we've never heard of this, and it coming up again. Title companies almost always is last minute paperwork coming up, and then everybody's scrambling like, oh my God, is this deal going to fall apart in the 11th hour because like we didn't jump on this earlier enough? So like over communicate. It's always going to be better. Like especially I knew that this scenario was going to come up, but I made too many assumptions that other parties involved in the deal were already taking care of it. So we kind of lucked out where the seller was already aware. But earlier on, like really as soon as you have somebody who's not a U.S. citizen coming in to potentially sell properties, like, hey, are you aware of FIRPTA? It's going to, kind of significantly decrease initial income from, the sale of this property, but there's a decent chance you're going to get a lot more of that back once you file taxes. Just to have that conversation earlier so it's not at the closing table is what we would have changed here. So hopefully this is helpful to you dealing with situations like this. FIRPTA, I remember how many headaches that this gave us like within our first year of business, but it set us up to deal with it better later on. SeriousLand.capital for any of your funding needs. 50K purchase price deals minimum. Land Daily Diligence Facebook groups, Zero Cost Review Land Deals, and LandPricer.ai. We're reviewing several more properties with that, getting our pricing mechanisms more accurate as we speak. About to get back to work on that right now. So with that, subscribe and share. Leave a review if you haven't already. It'll help a lot more folks check out this podcast. Catch you on the next one. Take care, everybody. Bye.